Houston here, co-founder of MarketClub with your 1 p.m. market update for Monday, the 1st of August. Okay, lots going on. We start off the first day of August and the first trading day of the week, and the cat is out of the bag, and the market doesn't like what it sees. The fact is the S&P 500 is now trading below its 200-day moving average as of this writing, which indicates further weakness ahead. The equity markets, which started out strong, as did crude oil and the dollar, all that has changed now when the manufacturing sector came out and said that things were slowing down quite dramatically. In fact, new orders grew at their slowest pace in 2 years in July. With new orders contracting, it represents a troubling development for the economy and the stock market. Viewers of this report will note that we have been very cautious on the stock market as we felt it was rolling over to the downside based on technical analysis. This is proving correct. At close today below the 200-day moving average, which comes in around 1285, we will view this as a negative for the S&P 500. At this point, the greatest fear is a potential downgrade by one of the rating agencies. Should that happen, then that will obviously be more pressure on the market. Many investors have become very complacent, and this, in my view, is a real danger. I think there's a major opportunity for making money in this market as I see the S&P 500 slipping to the 1265 level before any kind of a bounce. Excuse me. Now let's go to the markets and see how we can protect and grow your money in 2011. Obviously, what we're looking at right now is the S&P 500. You can see the rally here up and where we are currently trading around 1275. This is not a good sign for this market. Whereas there is the 200-day moving average. Let me just show you where this is. The 200-day moving average is coming right in there. So we're below it right now. We close below this level around here. It will not be a good sign. As you can see, we touched it very briefly here and then bounced up. Again, this would make, if we close lower today, this would be the 1, 2, 3, 4, 5, 6 day in a row we've closed lower. Probably tomorrow it will be a low, and then we may see some sort of a bounce. But generally speaking, the support level comes in right around these levels here, which we talked about, 1265. Let's clear the screen, go to our next market. And the next market is going to be silver, and that was on the defensive earlier on. It's come back. Let me just go a little bit closer in. It's come back, and it looks like it's higher for the day. And we have corrected the oversold condition, which was right here, overbought condition rather. It's sort of midpoint now, so we can go back up in this market, in my opinion. But I think this market was flat last week after several weeks of gains, and I think we're going to see the trend continue higher. Obviously, our indicators are plus 85, meaning there's a strong trend to the upside. Only our daily is negative, and that could change possibly later today or even tomorrow. Next market is gold. We've talked about this gold market quite a lot. That's trading around, this is live, it's $1,629.88. That's a new high. If we close up here, that'll be a new high close in gold on a closing basis. Our indicators are plus 100. And closing up here, this would not be a good sign for the administration, as it's really a no vote of confidence for their policies. So let's just do something just a little bit different today. I want to tell you about our personal training courses that we've set up with PMI, and this is something that you can take advantage of and look at. So this good news, it can benefit from. MarketClub has teamed up with PMI, one of the largest educational forces in the world, to offer personal coaching for MarketClub. That's right, personal coaching. This is your opportunity to learn many of the secrets about how the markets really work and how you can make money in the current market conditions. If you'd like to improve your trading, and who doesn't, give us a call at 877-219-1482. That's 1-877-219-1482. I think you'll like what you're going to hear. So let's go back to the markets now and take a look at our next market, and that's going to be the crude oil. Crude oil was very strong here. Traded as high as 98.50. It's right now trading at 94.30 towards the bottom end of the range. Huge volatility here. And we've been saying for some time, we thought, I'm going to close this out to get a little more data here for us. We felt for some time this market was going to come down and make another low and then possibly go up a little later on. Right now we're minus 60, meaning there's a trading range. And if we go down here, you see the market's very oversold. I suspect that we're going to see some recovery from this level, but maybe not today, maybe tomorrow. So let's see how that plays out. But generally speaking, crude oil is at the lower level of its Donchian channel, just like it was here, and you saw what happened, and just like it was here. So let's see how this plays out for the moment. But speaking generally of gold, this market, it's been sideways for quite some time. We're at the lower end of the range. I think we'll probably see a pop, a little bit of a rally the next few days in this market. So let's go to our next market, and that's going to be the dollar index, which I know is surprising to a lot of people, but the dollar index is higher today. Even though the dollar hit the 50-year low against the Swiss franc, it would appear that we are seeing this market go higher. And here's what we looked at before. We talked about this area, the 73.50 area right here, and you can see how this market sort of popped up from there. The lower end of the trading range, the lower end of the channel, 73.50 was support here. We are bouncing from there. Strong day in the dollar index, and I would imagine that's going to continue for a little while longer. I would not be surprised to see it back up to 75 and possibly even higher. But generally speaking, the market's putting in a good performance today. Next market is going to be the CRB, Reuters Jefferies CRB index. We've just we are looking for this. This is what we see in this index, and I want to share this with you because I think it's pretty cool. I'm going to put the telestrator back on here to give you an idea of how this works. We're looking for this market sort of, we think it's going to have this sort of pattern. So we think we're at the lower end. If we get down to this 33.50 level, 335 rather, I think we'll see the market regroup and start to build the potential. This could be the head of a head and shoulders. This is the left shoulder, and this could be the right shoulder. So I think we have to give it some time, but we're in an oversold territory like we were here and like we were here. So we may have a period of time where we go for several weeks going in this area, but eventually I think we'll come out and actually improve this area. We think inflation is going to hit quite big in the world, and it's going to be very, very difficult for us to avoid that given interest rates and everything else that's going on in the world of commodity markets. So generally speaking, lots of opportunities in the markets. Obviously gold, if we go back to our portfolio manager, you can see gold is plus 100, and you've got silver close by of 85. Certainly gold is the choice market right now. You've got 70, minus 70 on the S&P cash. You've got 60 and 75 on these things. Basically trading ranges here, trading range right now, but getting close to, really I urge you to pay close attention to this, because this market closes down here. It is not going to be a good sign. We are oversold, like right here, in the S&P 500, but we're getting to an area, and I just want to draw this out for you. Just draw this along here. We're getting to an area that should provide some support, a potential bounce, but I think we'll see this level taken out, then we're going to go much, much lower. So, hey, this is Adam Hewison. Thanks for stopping by. And don't forget, please take the time to, we appreciate all your phone calls that we get here, as always, and we would like you to take advantage of this personal one-on-one coaching that we have for you. It's 1-877-219-1482. Just give them a call, see if it's right for you. You may be surprised at just how inexpensive it is and how much it will help you become a better trader. That I'm very confident with. I was out in Salt Lake City. We've shot 55 new training videos for you to look at, but you must give them a call to find out how you can do that. So 1-877-219-1482. Hey, this is Adam Hewison. I'll be back here tomorrow, same time, same place, every success. And as always, we rely on our trade triangle technology for catching the big moves. I'll see you tomorrow.